Global custody bank State Street, with $44 trillion of asset under management, is expanding its crypto services, and Tether has issued another billion USDT. Just last week, they did the same. So we can see these stablecoins enter the market pretty soon, and we will see higher prices. We're going to break this down and much more. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Well, folks, the big news of the day is that State Street has selected Taurus for crypto custody and tokenization. Now, this is not the first go round for State Street with crypto. If you recall, back in June, they announced a partnership with Galaxy Digital, that's Mike Novogratz, to develop crypto trading products. So we're seeing all of Wall Street, guys, jumping into the crypto asset class. They are building new technology. They're adding crypto to their portfolio of financial products, and they're expanding globally with these services. So it's very bullish, right? These folks know the deal. They know what's coming, that crypto's here to stay. The world is going to run on blockchain. So they're trying to position themselves to get as much market share as possible. So here are the details. State Street, the global custody bank with $44.3 trillion in assets under its watch, chose cryptocurrency custody and tokenization specialist Taurus to provide digital asset services in anticipation of a more congenial regulatory climate in the US. The bank's initial focus is to go live with tokenized versions of traditional assets, with the first client named shortly afterward, State Street said. A natural role for a custody specialist like State Street would be to look after digital assets, but banks in the US have been forced with a major hurdle in the form of the SEC's Staff Accounting Bulletin 121, also known as SOB 121, which imposes restrictions on companies that want to hold their customers' crypto assets. So this is the BS rule that was repealed in the House and the Senate, but unfortunately, Joe Biden vetoed the ultimate repeal. But it's a BS rule from the SEC that they're trying to block many of these banks from custodying crypto, because it all goes back to Elizabeth Warren and nonsense that she's been doing. So these banks are finding other avenues of being able to custody crypto while the regulations are being worked out. Now, a couple things. They're launching ETFs. They're tokenizing. They're doing all types of different things with blockchain and crypto, folks. And I hope you see what's happening. This is taking place while many investors in the market right now are bored, are angry, are frustrated, right? They're feeling tired of the price not doing anything, moving sideways, a lot of volatility. But this is why on this podcast, we preached being patient and having the macro view on this market, guys. There's a ton more capital waiting to come into this market, but we need the proper regulations, and we need both Democrats and Republicans to work together. And this is why I've been pushing the narrative that, look, I'm not telling you to vote for Kamala Harris. I'm not telling you to vote for Donald Trump. But the one issue we need both sides of the aisle to come together on is crypto, so that we can get the full legislation and regulations, and we can allow more capital to come in. Now, ultimately, crypto is going to win. The point is, I want it to happen sooner than later. So my bags can go up. I've been very open and transparent. I'm here to make money. I do believe in the technology. I do believe in the application of it and the benefits and the improvements it's going to bring to the world. But first and foremost, I'm trying to get financial freedom. And secondarily, I will, want to see the adoption of the technology. So let me continue here. State Street has been very vocal about the need to change SOB 121, which could force banks seeking to hold crypto to maintain an onerous amount of capital to compensate for the risk, said Donna Milrod, State Street's chief product officer and head of digital asset solutions. All of these banks and Wall Street firms now have a head of digital assets, right? Whether it's Goldman Sachs or Morgan Stanley, they all have a person leading on crypto. They have a division, a team. It's pretty amazing. This was not here when I got into crypto, which was in late 2016. So here's a quote from Milrod. While we're starting with tokenization, that's not where we're ending. As soon as the US regulations help us out, we will be providing digital custody services as well. We know how to be a custodian. We don't do that on our balance sheet. We do that off balance sheet. They're not our assets. Lamine Brahimini, co-founder and managing partner of Switzerland-based Taurus, pointed to the benefits of tokenization, such as 24/7 trading and the ability to optimize collateral management, while echoing the need for a better regulatory climate in the US. Notice what was mentioned there, 24/7 trading. What have I been saying for years? What did I write in my book? 24/7 trading, global markets, 365 days per year, no borders, guys. And the reason why tokenization is so significant is that they're going to put stocks and commodities and all the securities of TradFi onto the blockchain and tokenize it. And you will be able to fractionalize things, like I said, 24/7 trading, instant settlement. And it's going to make markets more efficient. There's going to be more liquidity. It's going to open up secondary and tertiary markets. This is why I'm bullish, folks. The world will be running on blockchain. It's the token economy that, once again, I wrote about in my book. I've been telling you guys for years. These things are happening. It's not making the major headlines on CNN or Fox Business, but these Wall Street banks and the biggest financial institutions in the world are building, and clearly we see the trajectory that they're on here. So here's a quote from Brahimini. I'm quite sure this partnership with State Street will be a positive signal for the US financial markets in general, which, because of SOB 121, have been lagging those in Europe. So huge news, guys. I'm so bullish, and I'm excited for this bull market, but also, like I've been saying, for the future bull markets, 2028, the next Bitcoin halving, and that bull market run into 2029, 2030. So I've told you guys my plan. Cash out profits in this respective bull market. We haven't hit the top yet. Take some of that profits, spend some of it, of course, for lifestyle chips, right? Pay off some debt and reinvest some of it in crypto, some of it in the NASDAQ and traditional assets, and possibly real estate. So I'm looking to squeeze as much juice out of this orange as possible, grow my net worth, and build up my retirement nest egg. So those are my plans, folks. I don't know what your plans are, but I'm not trying to go buy a Lambo. I'm trying to get financial freedom, eliminate debt, and once again have that nest egg for retirement. So this is huge news, and like I said, it's not the first go round for State Street. They're working with Galaxy Digital, building out crypto trading products. Now, in context of that, it's important for me to rehash this news from just August 15th or last week, that we saw through SEC filings, the 13Fs, that Goldman Sachs and Morgan Stanley are holding billions of dollars worth of Bitcoin ETFs. They are invested in the BlackRock Bitcoin ETFs, Fidelity, and so forth. So again, we're seeing actual facts here of these Wall Street institutions and the biggest financial institutions in the world embracing crypto, launching products, building with it, and much more. Now, here's some data about the Bitcoin ETF exposure for the top 25 hedge funds. So 60% of the largest hedge funds have disclosed Bitcoin ETF holdings. See the direction we're going in here, folks, and wait till we have more altcoin ETFs. You're going to see capital coming into a variety of them: Ethereum, eventually Solana, XRP, and so on and so forth. Now, there's some news today that I'm going to highlight that the SEC is trying to roadblock the Solana ETF. But once again, these roadblocks can be put up, but we know it's not a matter of if, it's a matter of when. And it could happen next year. Let's say Gary Gensler is out and there's crypto regulations that have been passed, that could change very easily. But nevertheless, today BlackRock spot Bitcoin ETF IBIT did $728 million in trading volume today. So we're seeing a lot of buying up, and there's demand for them from the institutional investors and all of Wall Street. They want this asset class. And, I go back to what Paul Tudor Jones said in 2020, and it really clicked for me. He said, Bitcoin and crypto is the fastest horse in the race. In an environment where they're printing trillions of dollars, I could go invest in real estate. I could put it in the stock market. but I'm going to put it into Bitcoin and crypto because it has the faster appreciation in value. And we've seen Bitcoin has been the best performing asset over the past 10 to 11 years, not to mention altcoins, right? Bitcoin is usually the measuring stick that they use to compare to other assets because it's the most mature in the crypto asset class. But many altcoins have outperformed Bitcoin. That is a fact. But for the masses, you can't go throw 100 altcoins to them and say, "Hey, here's AVAX or here's Solana." They're like, "What the hell are you talking about?" But they know about Bitcoin because that has the branding. So you have to understand the narratives and the nuances of presenting this to people. But guys, this is why I'm bullish on crypto. This is why a majority of my investment capital is in crypto versus, the Nasdaq and traditional assets. We also got news that Tether has minted another billion USDT. Last week, I highlighted this. I tweeted about it and so forth while I was in Punta Cana. Looks like whales are starting to grab up stablecoins, and this is a big indication of liquidity that is going to be put into the market. Now that they're going to buy the dips, and we're going to eventually see all these things reflected as the market starts to pump. And it's not only Tether. We saw USDC, millions in USDC issued by Circle have been being issued over the past 3 weeks. So these are the different data points and metrics I use to get an idea of what's happening in the market, not my feelings, not my emotions. And I say that for the new people who are listening. My OG listeners, you know the deal. We don't move by emotions here. We don't invest by emotions. We go look at the charts, we look at the fundamentals, the macro, factual information such as stablecoin volume, stablecoin supply, the number of Bitcoin on exchanges, all these different metrics, right? But very bullish sign here, folks. We continue to see stable coins being minted. Now, quick word from our sponsor, and that is VeChain. VeChain is one of the top enterprise blockchains out there, guys. Many different companies and brands are using VeChain to build Web3 and decentralized applications and different ecosystems. I'm bullish on this project. I have been for years. I've been a VET token holder going back to 2018, 2019. They're doing a lot of great things. And some of the companies that are working with VeChain include Givenchy, BMW, Walmart China, PwC, one of the top accounting firms in the world, Sam's Club, excuse me. And some of the benefits of the VeChain blockchain include it is secure, affordable, scalable, fast, and sustainable. If you'd like to learn more about VeChain, go to vchain.org. Link will be in the description. Now, earlier I mentioned the Solana ETF situation. So we got the headline here. The SEC rejected the CBOE's 19B-4 filings for Solana ETFs. So look, Gary Gensler up to his nonsense. But we know that, the typical process has been you got to have a futures market and then you get the spot. But I see this more as a delay tactic. This could happen next year once again if there's a regime change. And I think Gary Gensler is out, whether Kamala Harris or Donald Trump wins. I think Gary's going to be out for sure. And we know Congress is working on regulations. So this could all change by next year. So this is not really surprising, especially that Solana was named in some of the recent lawsuits against crypto exchanges like Coinbase and so forth. Now, in the Binance case, we know Solana and a bunch of other tokens were removed, but we don't have concrete evidence that the SEC has officially, dropped Solana out of its radar of targeting it as a security. But look, we're dealing with scumbag regulator Gary Gensler. So until then, we got to keep fighting, folks. Now, something interesting happened with Binance. Bill Hughes, who I've had on the podcast, he's a lawyer at Consensus, said Binance and CZ were sued last Friday by class plaintiffs in Seattle federal court. An interesting class action brought by top class action lawyers alleging consumer harm as a result of Binance's money laundering and the natural, predictable follow-on civil action that seeks to capitalize, or depending on how you characterize these things, recover on the government prosecutions and enforcement actions from earlier this year. He says the TLDR here is these plaintiffs and the class of U.S. consumers they represent had their crypto stolen in hacks and other thefts, and those funds were sent to Binance for laundering. which Binance was aware of and to some extent encouraged as its lucrative business model. Plaintiffs say this injured them as Binance was an essential part of the laundering and constitutes illegal racketeering that violates the RICO statute. Look, we'll see what happens here, but everybody's going to try to come for their pound of flesh from Binance. The amount of money they paid, I think over $4 billion in penalties, and it's just because they weren't doing proper KYC, AML. They weren't doing any major fraud or anything like that. It wasn't like FTX, what Sam Bankman-Fried was doing, stealing customer funds and trading with them and all that jazz, right? But we'll see. We'll see where this goes, but just wanted to let you guys know about it. Paradigm leads $7.5 million seed round of Sorella Labs that aims to solve Ethereum's MEV problem. So this is interesting. The startup is building tools to solve Ethereum's MEV problem at the application layer. Co-founder and CEO Ludwig Thuvinen told the block, if I said his name right there. So you may be saying, what the hell is MEV? It's the maximum extractable value. So MEV refers to the profit validators or bots that can extract by reordering, inserting, or censoring transactions within a block. Common MEV strategies include front-running, executing trades before others, sandwich attacks, trading before and after large transactions, and arbitrage, profiting from price differences across platforms. These practices can result in higher costs for DeFi users and can give an unfair advantage to those with more resources. So, guys, it's great to see that these things are being worked on and solutions are being brought to the table, and also that there is capital being given to companies to solve these problems. That's very healthy in a growing emerging asset class. Now, VCs back AI-focused blockchain team building internet-connected smart contracts. So Yeager AI, the development team behind the decentralized AI network GenLayer, raised a $7.5 million seed round led by North Island Ventures. GenLayer uses non-deterministic smart contracts and a bespoke delegated proof-of-stake algorithm to enable new types of applications that interact with real-time information. Guys, it's so hard to keep up with all the new projects and all the things that are being built. It feels very much like the .com boom, where there's a lot of different projects, but not all of them are going to be a winner. So we have to watch it closely, but clearly, with the AI blockchain fusion, so to speak, we are seeing a lot of new projects popping up, new solutions, and I'm excited, but also you got to be careful, right? Just watch what's going on, how you want to enter some of these projects, whether they have a token. Is it a short-term hold where you runs up with the liquidity that comes from the VCs and the bull market liquidity, or is it a long-term hold because it is legitimately solving a massive real-world use case that you may want to hold for multiple cycles? So you want to strategize accordingly, and obviously look at the pros and cons of some of these projects. Well, folks, that's the news. I would love to hear what you guys think about the State Street news. I think it's pretty significant. That's a huge bank, guys, and it's like we've always been talking about game theory. BlackRock made the first move. Now all of Wall Street is following. Goldman Sachs, Morgan Stanley, State Street, you name it, Fidelity, they're all coming in line. BlackRock was the first domino, and the other dominoes are falling now. So I'm excited. I'm bullish. I know the price doesn't reflect that right now. It's boring zone, but be patient and have the macro outlook, folks. Liquidity is coming back. It's on the rise globally. Stablecoin volume is increasing, or supply is increasing. And we're going to go through the seasonality of the market cycle. So come, I think, after mid-September into Q4, we're going to start to see the markets move significantly. So be patient. Guys, don't forget to sign up for my free email newsletter on Substack. It's 100% free. Link will be in the description. Also, you can support me by grabbing a copy of my book, Rethinking Crypto, on Amazon or barnesandnobles.com. It's available in paperback and digital. If you bought a copy already, please leave a 5-star rating and review. It really helps out my rankings, and I appreciate you all. Thank you for watching and listening, and I'll talk to you all later.